Hey everyone, it's Zach back with a new mortgage video. Hope you're having a happy July 4th. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. Recently, the COO of KB Homes, which is the 8th largest home builder in the US, by market cap, had a couple interesting things to say about the trends of the new construction industry that were noteworthy to me. And basically what he said, and I'll post the exact quote, is that he sees homeowners are paying more than they should for homes in exchange for a extremely low interest rate relative to the market, and that when they go to sell, they may be upside down. And who he's talking about, to be clear, is companies like Lennar and D.R. Horton, which are not only the top two home builders in the US by market cap, but also Lennar and D.R. Horton both have in-house lending companies. And those mortgage originating companies have, at least in Texas, the third and fifth most loan origination volume for 2024. So these are huge players, and this practice that the KB Homes COO is talking about is very clear in Texas for anyone who is in the industry. What happens is a company like D.R. Horton will start a new community, typically, where there's not really any clear comps in the area. That's what appraisers go off of to determine how much a house is worth. If it's a new area and there's no clear comps, I've talked to appraisers, these companies really want to push a higher price than what the house is probably worth initially. These are Lennar and D.R. Horton, kind of like the McDonald's of new builds, if you're not familiar with them. They are affordable, but they are churning these out very quickly. A lot of the times they can be kind of cheaply done. But what will happen is they will offer really low interest rates, but by owning the mortgage company, they can take a loss on the loan because they're making so much more than it costs for them to build. A lot of the times they'll also offer realtor incentives, a higher commission to, again, justify that initial higher price. And then when they sell additional properties, they can point to that first one and say, hey, this was appraised at this amount. We can justify selling these other ones for the same amount. Common practice, and a lot of mortgage people will talk about it, but I think it can be dismissed as like you're just talking from your own self-interest, because ultimately these in-house lenders for Lennar, D.R. Horton, they're offering rates that a regular mortgage company is not going to be able to offer without losing money. But I thought it was interesting that one of the top 10 biggest home builders is basically calling out this practice. And not to say that there's no place for buying a new build Lennar or D.R. Horton home. I've heard mixed things personally. I have a Lennar property. I did not buy it new, but it's been about what I expected in terms of quality. But definitely go in recognizing that, yes, you're probably going to have a lower interest rate relative to the market, but you want to make sure you're holding on to it for at least, I would say, 7 years to make sure you have the highest probability of breaking even at the very least, and ideally making some money. If you have any questions or comments, feel free to shoot them below, or as always, you can call, text, or email me. But thanks for tuning into this one. Hope you all have a happy July 4th, and I will see you next time.